Welcome to Charts Today. My name is David Linton, and today's edition for Friday, the 1st of June, comes to you from London. And we start by looking at the dollar. And of course, the news this morning is the US steel import tariffs kicking in, and that's rattled the markets a bit. So we are seeing again this turmoil. Dollar is actually coming off the floor. It looks like this bearish trend, and the short-term bearish trend is likely to be short-lived. We do have a downside target of some 2.7%, but we need to go below the low we saw yesterday to activate that. So for the moment, the dollar is still bullish on that medium-term chart. And of course, the euro is just again coming off the top, so the reverse situation. And we do have a new downside target for the euro of 111, which is 4.5% lower. So it'll be interesting to see whether we make new lows on the euro and activate that target. But for the moment, the medium-term chart is pretty bearish, and we're just holding the short-term bullish trend just. Seeing the dollar against the yen, and remember this tends to be a lead indicator. We see the dollar actually recovering through the yen, which implies that it will do the same on the index and through the euro. We normally see the yen reaction first, so that's starting to look bullish again. And against sterling, sterling is already just falling away against the dollar back into bearish territory. So this theme of stronger dollar is just washing through. Looking against the euro, sterling looks weaker, and against the Swiss franc, sterling is still bearish below the trend and has been, and that medium-term trend is looking pretty bearish. Australian dollar sitting at 176 and bearish in the short-term chart as well. Bitcoin just nudging this 7,600 level, touched it several times yesterday, and that's looking like very short-term resistance there. Medium-term we're bearish, and long-term we are just wandering through the cloud as we've been pointing out this week. US stocks fell away yesterday on these steel tariffs. The market doesn't like this, even in the US. And it's really interesting that the market has struggled to recover. This is looking increasingly like a top for most US indices. The Nasdaq is still looking bullish on the short-term chart, but really not showing any clear signs of trend. And the Dow Jones weaker again, fell away a couple of hundred points yesterday, 250 points down. So we are just seeing that weaker Dow showing through. And the broader Russell index actually is the only one making new highs, but again, it sold off yesterday as well, down nearly 1%. So we are just seeing stocks really struggling. The futures this morning, little changed, just slightly up on both the S&P and the Nasdaq E-mini, but realistically, it's too hard to say at this stage whether the market will open higher or lower. FTSE 100 is bearish, still below the cloud, and the 250 is as well. And all the signs are that we'll see the European market selling off this morning. Mid caps lower in the UK, and looking at the Xetra DAX, hit quite badly yesterday, making new sort of 3-4 week lows. We're seeing here we're back to where we started at the beginning of May in the recovery, so not looking good at all really. And we've got downside targets of around 1% still on the short-term chart, 20% downside on the medium term. CAC Quarante was the strongest looking index in Europe, but it's now looking pretty weak as well, hitting new lows here too. The Japanese market was fairly flat in the end. But we're still bearish on the medium and short-term charts. Some 6% downside on the short-term chart. And looking at the Hang Seng, we're seeing also just bearish below the cloud. So markets all really struggling. Chinese market down 2/3%, and that long-term chart now starting to look very vulnerable, which we've been pointing out as well. The Sensex, the Indian market, looking a little bit stronger, was actually up slightly overnight, and the Australian market actually down as well. Steel imports tariffs hitting that market too. Looking at Brent crude, we're sitting at $77.50 at the moment, so we're still bullish in the short term. A lack of short-term upside targets at the moment, but the medium-term ones are very much there. And WTI, much the same picture. Of course, we are heading into the summer period, which is normally when crude does sell off, so we just need to keep an eye on that. US nat gas edging up, sitting at $2.95, touched 2.98 yesterday, so we are seeing that recovery just slowly continuing. We've got targets to 302, 303. Taking a look at gold, with all this turmoil, you'd expect gold prices to be rising, but the stronger dollar is having a bit of an impact here. And we are just seeing gold is mixed. We're short term just below the cloud there. And the silver, much the same picture, of course. Um, the US 10-year Treasury yield sitting at 2.87%, just entering back into a bullish phase, having been bearish for a couple of weeks. So we are just seeing that improvement. And if we look at the German bond, the Bund is actually just starting to fall again in price, so that probably means yields will kick up. Taking a look at Apple, Apple shares, of course, a Dow constituent, were down a third of a percent, so they were slightly better than the market, but we are just entering bearish territory again on the Apple shares, having really done nothing for the last week or so. Amazon just edging higher, so that bucked the trend yesterday. The market was slightly up. Um, Google also was up quite strongly yesterday, so we're just seeing that short-term chart looking a little bit better. And Facebook actually did make it above the 190 level for the first time. So we are seeing the Nasdaq stocks generally did better, and Microsoft just nudging this $100 level, sitting at 98.84, was down very slightly yesterday, just waiting for that breakthrough. That's it for today. Have a great weekend. Until Monday, happy charting. See you then.